Morgan Stanley set a target of 45,000 for the Sensex by December 2020. The global fund house also expects India to outperform emerging markets. I wonder if that, coupled with a few other things, is one of the many reasons why there's some bit of buoyancy as well in the markets. I mean, it helps to have large global brokerages bullish, but this is what they say in the report for 2020, Outlook 2020. By December 2020, they believe the Sensex could be 45,000, which would mean that the implied forward price to earning multiple would be 17.5 times for Sensex at that level, which is 45,000. Remember, this is a base case. The bull case, the Sensex, they believe, could also go to 50,000. Now, what are the few things that they are forecasting? This is the first forecast, the earnings growth forecast. For 2020, they believe the earnings growth could be 20%. For 2021, the earnings growth could be 23%. Why do they say that? Well, the reasons will come up on your screen. They believe that there is a modest improvement in global growth, which will anyways aid earnings, and policy action taken by the government. And they've cited in the report a number of these policy actions, including what they've done for the NBFC space, the corporate tax cut, and a few other factors, which will lead to this kind of earnings growth coming in for the Indian markets, 20% and 23% respectively. Then the next forecast that they've made, or the view that they're saying, is that India will outperform emerging markets. And why again? Because the gap, according to them, this is an indicator that they have in mind, the gap between the repo, Indian repo, and the US Fed rate is at an 11-year high. And as per Morgan Stanley's study, in the past when such divergence has happened is when the Indian markets have outperformed. So they believe this could happen this time around as well. They also believe this is a precursor for our immediate outperformance in India as well. So that is the other reason why they believe that India will outperform emerging markets. Now, the 2020 bet is that value and growth stocks will beat quality names. Now, this is so much spoken about that wherever there is some value being found, is that the pocket that will do well, or has the outperforming quality stocks continue? Morgan Stanley believes that the former will happen. And why so? Again, the rationale that they believe that there is an expectation of improved growth in all of those value names. The market positioning, not too many people are in those stocks, so therefore they are under owned, and therefore when people come in and buy them in droves, the multiples also might move up. And they believe, of course, that the relative valuations across sectors are in favor of the value stocks as opposed to the quality names. The next rationale, or the next thesis that they have, again in the same report, is that they believe that the small and mid cap stocks will beat the large cap peers. So it's not just value names versus quality. Even there's a natural fallout of that would be that small and mid cap stocks will beat the larger cap peers. Again, the rationale is the same. There's a valuation gap and there are improving growth prospects. So that's the basic. And the last assessment, or the last forecast that they are making, is that domestic cyclicals will beat global sectors. Now, this would mean that, and of course, the rationale is that earnings recovery will aid the domestic players more than the global players, and the global uncertainty, if any, might hurt the exposed players. So maybe they're trying to say, don't look at IT, don't look at export-oriented themes, look at the others. So what they are betting on, they are overweight on consumer discretionary, industrials, and banks. These are the three pockets that they are bullish on or overweight on. What they are negative on will also come up on your screen, and then of course we'll also try and talk about other things, but this is what they are underweight on, which is technology, healthcare, again globally linked stocks, and global materials. So that's the third pocket that Morgan Stanley believes that would be underperformers come 2020.
Neeraj, what about the individual stocks? What's on the focus list for 2020?
Yeah, they've given out a fairly long focus list as well with the target of 45,000. I just want to quickly sum up that as well. The rationale is all good, and it's a long report, so we've summarized it. But let's get the individual names up. So this is their focus list for 2020 in the consumer discretionary space. Bajaj Auto, Mahindra and Mahindra, Maruti Suzuki. So auto names feature right out there. Motherson Sumi is also a part of that list. And of course, they believe that Jubilant Foodworks is the other one that could do very well a part of consumer discretionary, simply put. So these are a few names from the larger names. Of course, also in the staple space, they believe ITC, the valuation comfort that they have here, and United Spirits might be the stock that they believe might actually make a comeback. For a long time now, nobody talks about United Spirits as an investment stock. Morgan Stanley believes it could do well. Energy and utility space, no surprise that Reliance features. This could well have featured in the telecom pocket as well, but energies and utilities, so utilities forms a part there. And Gujarat Gas, of course, also forming a part. I think there was a brokerage note yesterday as well on Gujarat Gas from one of the other brokerages. And then in the financial space, or companies aided by financials, whichever way you look at it, and material space, DLF finds a mention. The HDFC twins naturally find a mention. ICICI Bank does find a mention despite the run-up that we've already seen out there. Mahindra Finance, very interesting choice, as is Shriram Finance, so maybe some commercial vehicle recovery. If autos do well, CVs financing would do well. And MCX finds a mention too. Remember, divergent moves between MCX and BSE in terms of exchanges. And in industrial space, and Ashok Leyland has found a mention there, not necessarily in auto pack, but nevertheless, Interglobe Aviation finds a mention, and Larsen & Toubro, a stock that has really not done too well in the last few quarters, really, also finding a mention out here. So that's the set of names that Morgan Stanley believes are the top bets and the focus list for 2020, with the target price of 45,000 for the Sensex.